What is going on, my beautiful traders? It's your boy PJ Trades back for another trade review. If you guys are new here, just tuning in for the first time and you came across my content, I am a 9-year professional day trader coming on my 10th year of trading in January. And I give you guys tons of free value going over trades that I personally have taken today with my premium group. So listen, do me a favor, tap the like button, subscribe to the channel, and I will continue bringing you guys some free juicy sauce using ictconcepts. So let's get on into it TurboTax, presented by Tostitos, the chip company. So today, very, very clean inversion setup. And as I always like to break down my trade reviews, I like to give you guys the higher time frame and then break it down into how I'm on the 30-second now taking this trade setup. Okay, so here's the setup that we took. I'll go over, this in detail in a little bit, but let's kind of get over and show you guys what this market was doing leading up to this trade setup here. So if we look at this market, we're in a straight consolidation pattern. We are just consolidating, doing really absolutely nothing, stuck in their range. If we jump on the 15-minute time frame, we can see that this market is bouncing nicely off of a 4-hour fair value gap. But if you were here for yesterday's trade review, you remember that this 15-minute breaker is still holding price down. This is why this is so important to have on your charts, because it's going to give you continued guidance, maybe even the next day, like in this example, that this market is still respecting bearish order flow and this bearish breaker setup. So the market has failed to really pulse above this breaker looking for Asia highs. So I'm coming into this morning session and I had this drawn on my chart and I'm like, we are still respecting this bearish order flow and respecting this bearish breaker on the 15-minute time frame. Now, if we go on the 1-hour time frame as well, we could see, we are getting a nice bounce out of this 4-hour fair value gap. And it's also a 1-hour fair value gap down here as well. So we're getting a nice recovery, but it doesn't look too strong. It looks like it's just a little dead cat bounce, I'd like to call it, where you get a nice bounce, but the bulls are losing steam. It just starts to chop and consolidate, okay? So we don't really need to go to any higher time frames here, because one thing that people have like a misconception on, I am trading a New York AM session. I am looking for a trade into a draw on liquidity that's normally a pretty quick trade. I don't really care what's going on the 4-hour daily, weekly time frame. Yes, I need to know what the higher time frames are doing, okay, because that's going to give me higher time frame correlation, but it's not too important with the way that I trade. I'm a reactionary trader. So as you guys can see here on the 5-minute, this is really where things kind of get pretty clear on what's going on here. This market, okay, starts to, I'm just going to delete all this and we'll kind of like work back through everything in real time. Okay. So this market ends up consolidating, and what I call this right here is a 3-drive pattern. When you see the market in 1 drive, 2 drive, 3 drives, failure. Okay, that is a 3-drive pattern. This market creates a 3-drive pattern, displaces through relative equal low, okay, and it's starting to give me signals on the lower time frame that this actually looks like we're going to get a continuation model towards the Asia low, which is going to be my overall draw on liquidity. So what I'm looking at here, guys, here's the key to the puzzle. This 5-minute fair value gap, okay? If we're going to be bullish on this session, because I know a lot of you guys are looking at this video and you're probably like, hey, PJ, why are you not looking for a reversal out of these relative equal lows? Here's the key to the puzzle today, this 5-minute fair value gap. If we were to inverse this 5-minute fair value gap to the upside, okay, we would be looking for a long into relative equal highs and London high. It's that simple. But we put in this 5-minute fair value gap and then look at the way price reacts from it. This is the key to the puzzle, guys. The market comes up and it starts to respect consequent encroachment of the 5-minute sell side imbalance, buy side inefficiency. We are not getting any strength or closures of candles above this 5-minute gap. That is the key to the entire piece of the puzzle here. Okay. So why am I looking for shorts here? Well, it's because we're respecting bearish order flow. We're not disrespecting now to the upside. We're holding steady and we're disrespecting this 5-minute sell side imbalance, buy side inefficiency. So I start to see this on the 1 minute, right? Now this is where you got to kind of fine tune your entry. If we bring price back here, we can see that this market is looking really choppy, right? Really, really choppy. But what happens is it comes up into this 5-minute gap and we're getting so many rejections and wicks out of it. There's really no true bullish strength through here, like I just said on the 5-minute. Now, I execute this trade today on the 30-second time frame. Why? Because on the 30-second time frame, it leaves behind, and it did leave behind the same gap on the 1 minute, but this 30-second gap to me was really the gap that I was looking for confirmation out of. Okay. What ends up happening here is this market slowly but surely puts in the first clue that this market is not ready to go higher and we're going to have a continuation lower. Here it is right here. Okay. Now, you probably didn't even catch it. We put in a very small breaker model right here on the 30-second. Okay. High, low, higher high, wick high. Okay. And then a beautiful displacement. So this already tells me, okay, it's kind of like a clue. It's kind of like Blue's Clues. Like this is a clue on the 30-second that we just printed a bearish breaker. But the reason I didn't execute the bearish breaker model is because we have the 30-second fair value gap right below the breaker. Okay. So the confirmation is this candle closure below this 30-second inverted 30-second gap, creating a 30-second inverted fair value gap. That is your confirmation for shorts now. So we change this into an inversion gap. Okay. We're respecting this 5-minute bearish gap. Don't forget that is a bearish gap. We put in a 30-second breaker and now a 30-second inverted. Okay. And how I trade this is very simple. We wait for a little pullback and jab into this inversion, targeting the Asia low. So the next candle prints. Okay. Next candle prints, and we have a retest of the 30-second inversion. Okay. And now we're executing the trade. This is it. This is my confirmation. Now, one more thing. Well, I'm gonna show you guys a little bit later in the trade some things about low resistance liquidity. Okay. Now, what I'm immediately getting drawn to here is these relative equal lows that get put in. That is another clue and another piece to the puzzle. Whenever the market engineers a relative equal low, after putting in a bearish signal like the bearish breaker and then the inverted fair value gap, and we have a clean relative equal low right below us, my eyes are like opening like it's Christmas morning. Like this is very, very high probability here. So all of that put together, we now enter the trade and we're now in it, virtually no drawdown. Now, as soon as we take this low here, this trade becomes a break-even trade. We scale some off here, and then the market starts to chop sideways. But here's what I want to teach you guys about low resistance liquidity. Watch how this market engineers all of this LR. I'm going to show it to you right here. I'm going to mark it out. As you can see, right here, this market is starting to engineer 3 little wicks like that. This is what I call low resistance liquidity. Okay. The market wants to come down and grab these now. Okay. So while we're sitting in this trade, and if you have the knowledge of what LR looks like, it's going to give you a lot less anxiety watching this market kind of dig even like up closer to where your entry is. But then watch what happens here. The market tags all the LR, and we just start slowly but surely moving to our final destination at the Asia low. And you can see here, we finally end up getting sometime this year right into the Asia low draw on liquidity. So there is a lot that goes into being able to identify this stuff, especially on the 30-second time frame. And don't get me wrong, the 1 minute time frame has a very clean inverse here too, and I could have executed on that time frame as well, but I was looking to really fine tune my entry with this one. And the 30-second to me provided a clearer picture on how to trade it, and that's where I made a decision to basically execute this trade towards the Asia low. So that is today's trade review, guys. I hope you guys are getting value out of these trade reviews. And as always, if you are enjoying them, just drop me a comment, like, and don't forget to subscribe to the channel so you're notified whenever I drop a new trade review. Have a great day.